Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to talk about another project that in my opinion has a good short-term opportunity, and this project is called Formation Finance or the Form token, right? Again, as always, I highly recommend you guys to do your own research on any of the projects that we cover on our channel. And for this project, I recommend you guys to go to the website Formation.Fi in order to learn more about this project, right? So, since there's not a lot of information about this project on CoinMarketCap, I'm gonna rely on most of my information from their website. But you guys definitely need to do your own in-depth analysis before you choose to invest any of your money on this token, right? So what is Formation Finance? So right off the bat, you have this clear and cool website that has some really weird graphics in the background, but you can clearly trade the Form token, and that's basically what they're advertising here. And if you see the end of yield chasing, welcome to cross-chain risk parity, smart farming 2.0. So that's basically what they're trying to advertise. And if you see, you can basically buy the Form token by clicking on this link. You can swap any of your tokens such as USDC or USD Tether to buy Form tokens as well. You can basically buy this token on KuCoin, Uniswap, Gate.io, and PancakeSwap using several different blockchains. But again, you have an option to kind of like buy it with Bitcoins. You can buy it on Ethereum and Binance Mansion because it's available on both of these chains. I'm not really sure if they're planning to expand to Polkadot, but if they do, then they will definitely have a lot of traction in that blockchain as well, right? So if you take the project, they haven't really done a really good job of explaining their product. They're basically trying to advertise their product right off the bat, but it's a different strategy that they're using. So before you can understand the project itself, you'll be able to see where you can buy it and who are backing this project, right? Which is something it's the exact opposite of several other websites that we've seen. So if you see, this project is backed by founders of the Bancor network, which is one of the most popular decentralized exchanges on the Ethereum blockchain. It's backed by Synthetics, Spark, Polygon, Kinetic, M6, Shima Capital, Cosmos, Clinch Block, GBV, BlockSync Ventures, AU21 Capital, Autonomy Capital, Magnus Capital, Moonwhale, Faculty Capital, Lotus Capital, Iconium, GD10 Ventures, and several others, right? So again, if you see, they have some notable names here, which includes AU21 Capital, GBV, obviously the founders of Bancor, Synthetics, and Polygon as well are some of the most kind of like influential personnel in the crypto space right now. So them backing this project is kind of like a big thing, but at the same time, you can't really see some of the most popular venture capitals investing, but you can see a couple of relatively less popular but still capital nonetheless in being invested in this project, right? So that's that. So now let's go to the project itself. So Smart Yield Farming 2.0, that's basically how they're branding their product as. By adapting the three core principles from All Weather by Bridgewater for the yield farming environment, Risk Parity Protocol offers 4 classes of cross-chain yield farming strategies in the form of the following index coins. Again, if you see, they are trying to incorporate cross-chain yield farming strategies in order to get the best yield for the users. And if you see, they're trying to use one of these they're using 4 of these kind of like coins, alpha, beta, gamma, as well as form, in order to make the cross-chain yield farming plausible. And if you see here, they're stating that no one tells you how much you can lose, but you will. Wrecked, rug pull, slippage, impermanent loss. So these are some of the problems that this project is trying to solve. They're trying to make sure that people don't get wrecked on their platform. People don't really have an opportunity to get rug pulled, because the thing is, the system is set up in such a way that its cross-chain yield farming strategies benefit people who want to like invest in this project, and therefore it deters people who want to do rug pulls, right? And if you are tired of seeing high slippages as well as impermanent loss on certain traditional decentralized exchanges such as Uniswap and SushiSwap, this project has you covered because they try to mitigate all forms of slippage issues as well as impermanent loss issues, right? So if you see revolutionizing DeFi portfolio construction, you have traditional yield farming 1.0, which basically is the current state for many of the DeFi platforms, and they kind of like show you how you are basically chasing yield without attention to risk, and that leads to a lot of impermanent loss, slippage, rug pulls and scams and so on and so forth. But on the right hand side, you can clearly see that Formation Finance is bringing smart yield farming 2.0, which is what they term this process as, reconstructing portfolio risk to optimize yield. So the main goal of this platform is to focus on safety or security rather than yield, which is the current exact opposite of what's happening in the DeFi space right now. And by doing this, they are trying to mitigate risk to almost all of its users, thereby giving them an opportunity to do yield farming in a much more comfortable and convenient manner without having to fear the loss of their capital, right? And that's basically what they are trying to do here. Yield farming 2.0 over time. So if you see, why do we need to focus on safety, security and risk when we already know that crypto is overall risky, right? To be honest, if you think about safety and the profitability, the more safe a project is, the more money is going to eventually generate over the period of time, and that's basically what they're trying to picturize in this graph here. So overall, if you try to mitigate your risk and work with projects that are extremely safe, those projects eventually get a lot of traction, and thereby it kind of exceeds expectations and becomes one of the most premium DeFi platform on the crypto space right now. Some classic examples are again Aave. It's one of the most secure and extremely popular decentralized DeFi platform on the crypto space right now. And apart from focusing on yields, Aave has mainly focused on security and risk management, and that's one of the reasons why they're extremely popular. If you see their yields and you compare that with some newly released DeFi dApp, you will see that the newly released DeFi dApp will have upwards of more than 100% APY, in some cases thousands as well as millions and millions of percents of APYs in some ridiculous Binance Smart Chain based project. But if you see Aave, they barely offer you like 3 to 5% on a consistent basis, right? But if you see the security wise, you know that Aave is going to be there for quite some time and it's not going anywhere. But the newly formed DeFi dApp that's giving you millions of percentages in APY can easily crash and be worthless, right? So that's basically what is presented in this graph, maximizing yield in the long run, which will happen eventually as people start feeling comfortable using a particular platform, and that's exactly what Formation Finance is aiming to do, right? So the era of protected APY, say hello to risk parity, and this is for the FORM token, the native token, right? So again, if you see, you need to obviously mitigate risk. Projects in the DeFi space are getting extremely wary that their users are not necessarily managing risks that they should be managing in the first place, and thereby projects are forced to create dApps that build a risk factor or risk mitigation factor in place in order to prevent new users from getting wrecked in the DeFi space. And Formation Finance is basically one of those projects that's already trying to mitigate risks for its users by default, thereby making it a safe platform, period, right? That's basically what they're trying to do, and that's a very interesting phenomenon. So if you see grabbing risk at the core of an asset, so whenever you have an asset, it has a very high APY initially, but then overall the APY decreases, and there's no guarantee that those APYs are sustainable, nevertheless secure. So the platform could potentially be a scam pretending to give you multiple APYs, multiple thousands of APYs on a weekly basis or a bi-weekly basis, and they can easily rug pull on you or scam you, right? And that's basically what they're trying to say here. And if you see risk parity algorithmically debases the best performing farming strategies with a high degrees of composability across major blockchain networks using the basic principles of risk parity movement achieved through algorithmic predictive intelligence. Again, here they're using a lot of fancy words, but overall what they're trying to say is they're trying to focus on mitigating the risk within the platform by incorporating it algorithmically so that it's completely decentralized and it's completely self-sustainable in its own right without any external force kind of like trying to act in order to stabilize the ecosystem, right, or mitigate the risk from the outside environment. So that's very important, and I believe that most projects will be moving towards this direction. When a user sets a level of risk with a minimum commitment amount determined by the algorithm in top reserve currencies such as Bitcoin, ETH, DOT or BNB, the protocol will automatically configure and recommend a chain agnostic portfolio of yield farming strategies tailored for the risk profile of the users. Again, depending on your risk profile, the platform will basically suggest you yield farming strategies that you can use in conjunction with the reserve currency that they have, Bitcoin, Ethereum, DOT as well as BNB, right? So that's basically that. How does it work? If you want to read through the full information here, you have this section here which I'll allow you guys to do your own research and read yourself to understand this project. So any assets, any of these 4 assets can be used. Any network, it is available in multiple different networks. They're also trying to target the Cardano blockchain, which is also going to be interesting. And they're trying to use hedge fund strategies, alpha and gamma and beta and form on the right hand side. So again, this is a pictorial representation of how the project works. Risk parity, there's a increase in risk or decrease in risk, and auto compounding is also possible with one click, protected APY and engineered returns. Again, they're trying to maximize the yield in a safe and risk mitigated manner, bringing front end to DeFi blocks, formation risk parity. Again, more information, more kind of like information about the different types of dApps that they work with. So if you see, click here to make money, you can use, you can basically look at the infrastructures that they're already using in order to mitigate risk. So similar to Yearn Finance, any funds that you put in Formation Finance will be moved to different platforms that have different risk management levels, and many of these are obviously extremely good quality projects, so the risk is extremely low, and that's how they kind of like maximize the yield, right? So if you see, they do this for multiple different layers. Layer 1 including Ethereum are also kind of like used in a multi-chain manner, but if you want to use a yield farming strategy from Polygon, that is also possible. So since they're multi-chain and cross-chain compatible, they're trying to give the best yield for its users while simultaneously protecting them from serious risk or security issues, right? So that's basically the main focus here. Single click, pure returns, DAO governed hedge fund strategies. Again, they're using their platform is in the process of becoming a fully decentralized autonomous organization, or DAO, where the form token holders, the native token holders, have a say in the governance aspect of it, and they're also trying to make this fully easily accessible to every regular user, which previously only had been accessed by the hedge funds, right? So that's basically what they're trying to say here. Here, more information about the platform. Radically optimized risk reward ratio engineered for fixed returns. So you have your funds going to different blockchains, 50% allocation on Ethereum, 30% on Binance Smart Chain, and 20% on Hiko Chain, and so on and so forth. So you can choose the risk allocation as well as the rewards, which are presented in the left. So depending on your risk tolerance, you can choose your particular plan and you can go on with it, right? Form token holders, so people who hold form tokens have governance aspect, as I mentioned before. You have reward sharing, which is also a very interesting theme here, because if you hold form tokens, not only are you going to be participating in an ecosystem that's cross-chain and extremely risk averse, but at the same time you are also entitled to receive a small portion staking of a protocol reward as staking revenue, right? And this is about 50% of the protocol revenue basically gets streamlined to farm token holders in the form of staking rewards. So that's that. And if you see, they also have dark pool, member only price discovery liquidity pool that provides you slightly more yield farming opportunities as well, right? So if you see, they have other information here. Again, they're basically like what if you could generate a fixed income that couldn't be automatically sent to your wallet each month. So this is basically the theme here. They're trying to generate fixed income, and they're trying to make sure that banks are removed, making your own bank just like many other crypto projects, but they're trying to do it in a much more risk-averse manner. Making money should be simple. We build those bridges to bring you cross-chain risk optimized return in one click, and that's basically what we've been going through so far. They have the roadmap, which is again a very important information to see, just to see how much progress they made, and it's good that they're showing progress as well. So they have made 10% progress in the Q2 plans, and if you see, they have Binance Smart Chain Bridge development, which is going to happen pretty soon. You would also have Uniswap and TGE listing that will also happen in Q2 of 2021. So again, this token is still a relatively low market cap, in fact like micro cap token, as we'll see shortly. So if you want to get some of these tokens, I'll tell you how you can do it for free by the end of this video. And at the same time, if you want to buy this token, there's also methods to buy it with very low fees as well, right? Which I'll also cover by the end of this video. Q3, they're trying to launch token swap between networks. Alpha will be launching on ERC20 as well as a Binance Smart Chain version, a liquidity generation event. There'll be governance development. You will also have the HECO bridge development as well as centralized exchange listings, which will be something that you'll see in the next quarter. So if you want to, if you're anticipating some really big listings, then you can basically buy this token beforehand and await the listings. And then once the listing is done, you can obviously sell the token for a small to medium sized profit, right? So you also have information about the Q1 of 2022 and Q2 of 2022 as well. They're trying to basically expand to as many chains as they can and trying to make cross-chain swaps possible with little to no issues. Again, if you see form early team, so these are the team members. Again, you can't actually see their faces, but at the same time, you have their names, which you can independently Google and verify to see what projects they are involved in, right? And that's that. Basically, they have an ERC20 token version as well as a BEP20 version as well. So you can buy it from Ethereum or Binance Smart Chain. It's up to you. But at the same time, you will also be able to find this sooner in the Cardano chain, Polkadot chain, as well as in HECO chain as well, right? So again, it's a pretty robust project, and it is something that's quite under the radar of everybody right now, and I want to cover this project. So going back to the coin market cap page for Formation Finance, this token is currently ranked 1084th by market cap on coin market cap, and is currently trading at 23 cents per token with a 7.26% decrease in the past 24 hours, right? And if you see the market cap, it's actually less than $10 million in market cap. So this is a really, really good opportunity to look into this project. And I'm not suggesting people to buy this token. What I'm saying is it is a project that is trying to have a solid kind of like place in the future, especially with the risk-averse, risk-optimized opportunities that it's providing for new retail investors, as well as opportunities for experienced traders or experienced crypto investors to take a little bit more risk in order to get higher rewards. So for a platform that aims to do so much and makes you your own bank, a project that's the project being less than $10 million in market cap is extremely, again, it's a huge bargain, and that's something that I want to put in your radar. But if you see, the max supply is one of the worst things about this project that I hate about, and the fact is it has 1 billion tokens. Again, a huge number of tokens, which is not necessarily my favorite part of this project. And at the same time, my second less favorite part of this project is because of the fact that this token has only 3% of its max supply in circulation, which means you're going to get hammered for a long time until this project starts picking pace, right? Although the project has some really cool ideas and it's trying to do something really good, there needs to be a lot of traction in order for the in order for people to kind of like buy this token and hodl this token or stake this token instead of selling it and creating a sell side pressure that will potentially dump the token and slump the market, right? So again, in order for that to happen, I want to basically see a large volume, because if you see the volume is still extremely low. If you see the 24-hour volume, it's only close to $2 million in volume, traded volume. Although this token is not necessarily listed on several exchanges, like big exchanges, I understand that, but at the same time, you need to see some consistent volumes in order to be confident in the longevity of this project, right? And also there's a lot of competition from several other new DeFi platforms on a daily basis that's competing with these kind of concepts, and they're trying to bend what you can basically do. You can blend basically centralized financial services as well as decentralized finances. So with so much innovation going on, Formation Finance is on a pretty competitive pace, and it is trying to basically do a lot of good things, but at the same time the tokenomics is not really the best part, and the circulating supply is also extremely low, which means you have a long way to go until you start seeing actual scarcity, which will also be a price positive factor on the price of this token, right? So again, apart from the tokenomics, I'd probably say that this token has not a lot of exciting things to look forward when it comes to tokenomics, but you can still definitely make a short-term gain if you are careful enough, and that's something that I'm planning to do for this token, right? So if you go to the charts, you can clearly see that this token has kind of been in the cooling down phase for quite some time. It hadn't really actually pumped like crazy, just like many other projects, which is also something that makes me feel like the tokenomics is probably one of the main reasons, because it doesn't seem like the fundamentals have anything to do with the reason for the price to kind of like be like moving sideways or moving in a lower downward trajectory. But I think it's the tokenomics itself. But if you see, the token price has been available since June 19th of 2021, and the token price was 22 cents per token. And as you see, the price of this token right now is pretty much the exact same or close to what it was like when it initially launched, and it hasn't really moved anywhere. So that's basically the overall point here. And if you see, immediately after the token launch, the token went up as always with extreme volatility and reached 40 cents per token before crashing back down to 19 cents per token, and then going back up to its current all-time highs of 41 cents per token, and then since then it's been either crashing or moving sideways, right? And now this token seems to be going again, trying to retest its previous all-time lows and reach a price point of somewhere between 18 to 19 cents, which is a good possibility. So I think this token can easily go to its new all-time lows before it has any serious momentum to pump, because if you see from their website, they have a lot of upcoming exciting events that will make them list on centralized exchanges, and they'll also be available multiple chains. So as new exchanges start listing this token, you will definitely see a huge spike in the price of this token for people who want to trade it for the short term, right? So this is an opportunity for a really good short-term gain. And since the token is closing its previous all-time lows, this is a good opportunity to dollar cost average in if you are looking to use this token for a short-term gain, right? For long-term holders, I don't really know why this token would be a good long-term hodl. But for people who want to hodl this token long-term, by all means go ahead. You will definitely get a lot more better price opportunities to buy this token in compared to this price point, right? So if you go to the Bitcoin comparative, you can clearly see that there's pretty much literally like half of the chart has been exactly the same as the dollar comparative, but the right hand side of the chart, this token has been doing extremely poorly in Bitcoin comparative. And if you see, the initial price point of this token was 6,200 satoshis. Sorry, not 6,200, it's I think 622 satoshis, and then it made an all-time highs immediately of about reaching a price point of about 840 to 850 satoshis before crashing back down, and then making its actual proper all-time highs of about 1,200 satoshis before going on a declining trend, and it's now at its all-time low. So if you have an opportunity to buy this token with Satoshis or Bitcoin. This is pretty much the lowest of the low, and it's an all-time low in the Bitcoin comparative of about 495 Satoshis per token. If you choose to dollar cost average in at this price point, it's a really good price point. But if you want to buy this token with dollar comparative, I'd suggest you to wait, right? But that's just my opinion, guys, not financial advice. If you go to the markets itself, you can clearly see that this token is available only on a select few centralized exchanges such as KuCoin and Gate.io, and you can also get it from some shady third tier or fourth tier exchanges, but I wouldn't really recommend that. But you can definitely get it from the Binance Smart Chain through PancakeSwap using BUSD, from the Ethereum blockchain through 1inch, and they haven't really listed on Uniswap yet, which means during the Uniswap listing you'll probably see a price spike, right? So in order to make sure that you buy this token at the absolute low, you can probably wait till this token breaks below the 20 cents mark, go to PancakeSwap and then use BUSD to buy some of this token, or you can either use the BUSD to buy this token or stake some cake tokens in their syrup pool to earn this token extremely passively, right? Which is what I'm doing currently. So if you go to PancakeSwap syrup pool, you can basically stake some cake tokens to earn close to 72 to 75% APY on this token passively until you decide whether you want to invest in this token or do your own research, right? So that's a passive means by which you can earn this token on the Binance Smart Chain, and you can probably wait till a major major centralized exchange starts listing this token, right? This token is already listed on Uniswap, by the way, so I kind of misspoke in my in the few seconds that I mentioned about Uniswap. But this token will definitely get listed on several, at least tier 2 to tier 1, at least one tier 1 exchange, centralized exchange, but it will be listed on several tier 2 centralized exchanges as well, right? And once this token gets listed on either Huobi Global or some other popular exchange, the token price will start going up, and that would be a good opportunity to sell this token if you're a short-term trader, right? And that's exactly what I am planning to do. So if you guys want to use this token as a short-term trading opportunity, that's up to you, right? Overall, what's my verdict on this? I think this token has some strong fundamentals and very poor tokenomics, and it has a lot of it needs a lot of time to prove itself. I'll probably keep my eye out on this project because I just want to make sure that I don't miss out on an opportunity that can potentially flourish. But at the same time, there's going to be a lot of competition for Formation Finance because a lot more projects are basically coming on a daily basis that's doing exactly the same or even slightly better with more or less better tokenomics than this project, and even more advertising and marketing than this project, right? So I think this project will definitely be on my radar for the potential long-term buy, but for now I'm just going to invest in this token for short term to make a quick buck once this token gets listed on some centralized exchanges, or once it gets expanded to Cardano, Polkadot and other blockchains, right? So that's just my verdict, guys. Again, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please hit the like button and subscribe for more videos. See you in my next video. Bye.